Working in a startup, receive ESOP as compensation. Want to know how it is taxed? How long can you defer the tax? What are the disclosures in written? Want to know all these answers in detail? This video is for you. This video is specifically for ESOPs provided by startups. Want to know about normal taxation of ESOPs? Watch my other video. Link is available in the description. Under Section 17 of Income Tax Act, ESOPs are taxed at two phases, at the time of allotment and at the time of sale. At the time of allotment, the difference between fair market value and the excise price is treated as perquisite and it is taxed. Know more about fair market value? Watch the other video. For employees receiving ESOP from eligible startups, they need not pay tax in the year of exercising the option. It can be deferred or postponed. Who are these eligible startups? It can be a company or a LLP incorporated after 1st April 2016. The business engaged in being innovation, development, or improvement of product or process. Their total turnover should not exceed 100 crore. They should hold a certificate from the Interministerial Board of Certification and also be registered under Startup India Initiative. Department for Promotion of Industry and Internal Trade is responsible for this. How long is it deferred? Tax liability is triggered on earliest of these three events. On expiry of 48 months from the end of the relevant assessment year, or on the date of sale of those securities, or the date where you are no longer an employee. So what is the tax deducted? Within 14 days of triggering the liability. What would be the rate of tax? The rates applicable for the financial year in which the security was allotted shall be used. What are the IT disclosures? Scheduled salary. Difference between fair market value and the excise price shall be entered under perquisites column. Then the scheduled tax deferred on ESOP. PAN of the startup, DPIIT registration number, tax deferred brought forward details, the transaction details of sale or triggering the liability shall be entered here. If you have allotment on various years, keep track of all these details. Dates of allotment, fair market value for each allotment, the excise amount paid, the deferred tax amount, the TDS amount, and sale price. You should note that this deferment of tax is only for the phase one, that is at the time of allotment. And the allotted shares or securities are sold in a year, they are taxed under capital gain and there is no deferment of taxes. This summary table is from the previous video but relevant to this topic. The next table is what we discussed as of now. Hope this video was useful. Please like, comment, share and subscribe. Thank you.